Ladies and gentlemen, good day and welcome to the Q1 FY’25 earnings conference call of DCW Ltd hosted by Valorem Advisors. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Purvangi Jain from Valorem Advisors. Thank you and over to you, ma'am.
Good afternoon, everyone, and a warm welcome to you all. My name is Purvangi Jain from Valorem Advisors. We represent the investor relations of DCW Ltd. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the first quarter of FY’25. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risk and uncertainties, which could cause actual results to differ from those anticipated. Such statements are based on management's belief as well as assumptions made by and information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Let me now introduce you to the management participating with us in today's earnings call and hand it over to them for their opening remarks. We have with us Mr. Satwik Jain, President, Mr. Amitabh Gupta, CEO, Mr. Sudarshan Ganapathy, COO, and Mr. Pradipto Mukherjee, CFO. Without any delay, I request Mr. Satwik Jain to start with his opening remarks. Thank you and over to you, sir.
Thanks, Purvangi. Good afternoon and welcome to DCW's earnings call for the first quarter of FY’25. In the first quarter, we continue to witness ongoing dumping of commodity chemicals into India at depressed prices. This seems to be a common pain point for our industry across the board. On the demand front, export demand remained sluggish. Due to these reasons, we saw continued pricing pressure across most of our products. In Q1, our commodity segment volumes across most of our products showed marginal growth year-on-year, except in synthetic rutile. On the other hand, the specialty segment experienced a sales volume growth of 80% in both synthetic iron oxide pigment and CPVC, supported by the enhanced capacity from the recently commissioned capex by our company. However, some slowness in SIOP volumes was seen in Q1 due to increased freight rates and natural seasonality. As I mentioned earlier, net realizations across products saw corrections, with caustic, soda ash, and synthetic rutile decreasing in the range of 12 to 30%, and the specialty segment prices also decreased by around 5 to 10%, while PVC prices remained firm due to higher inward container freight. PVC prices, however, we feel are not sustainable and have already started showing corrections as we enter into Q2. Global volatility and demand situation in China has put significant pressure on exports of synthetic rutile in both volume and price. However, we are seeing some green shoots from H2 of this year. However, this is later than we anticipated. Our company's strategic investments and increased capacities in specialty chemicals over the past several years have provided stability to the bottom line even in such volatile and uncertain market environment. EBITDA contribution of our specialty chemicals to our business has increased twofold year-on-year despite minor corrections in realizations. To further strengthen our position, we had made fresh investments during the last fiscal into our specialty chemicals business with double CPVC capacity and line balancing capex to increase utilization of SIOP from earlier levels. The CPVC capacity was completed on time, with production ramping up from Q3 of last year. We are happy to state that Q1 was the first quarter with 100% production at the new capacity, which has helped in increased sales volumes. Additionally, our SIOP capex has been completed in the month of May, with capacity ramping up slowly. Production volumes in Q1 were up almost 15% compared to the average of the last fiscal. We expect gradual increase in sales and full benefits to accrue from this from H2 onwards. Our investment in the renewable energy project is also underway and is on track for expected completion in H2. With the current capacities online, we are consuming almost 70% of our chlorine internally, up from 65% as mentioned at our earlier interactions. Our aim is to be chlorine neutral by FY'26 with consumption in value-added products while keeping our debt numbers in check. In the coming months, we expect commodity chemical prices to remain subdued due to excessive dumping at low prices, while specialty chemicals are anticipated to perform with a stable pricing situation and added volumes. This FY, like last year, we expect that our company's performance is going to be skewed towards the second half of the year. With that, I now request our CFO, Pradipto Mukherjee, to brief you on our financial performance. Over to you, Pradipto.
Thank you, Satvik, and good afternoon and welcome everyone to Q1 FY'25 earnings call. The revenue for the company in Q1 FY'25 stood at 500 crores as against 438 crores in Q1 of last fiscal. This is an increase of 14% despite an overall price impact across all our product segments affecting the overall by 10%. Barring the PVC division, where the prices were firmed up in Q1 in the current fiscal due to increase in import prices on account of container freight, all our products witnessed price erosion. The YOY major price erosions have been witnessed across soda ash, caustic and synthetic rutile. CPVC also had some price erosion on account of excessive dumping from Southeast Asian countries. It's important to note here that the volumes across all our commodity segments were maintained with a positive bias, and the specialty segment, namely CPVC and SIOP volumes, increased by 80% at the back of commissioning of the last announced capex. On a quarter-on-quarter basis, the revenue dipped from 621 crores to 500 crores, a dip by 20%, while the prices remained fairly stable across the quarters. The major impact in revenues was on account of lower sales volume in synthetic rutile. The dip in synthetic rutile volumes were partly attributed to sluggish export demand and partly due to the fact that Q4 of last year had favorable volumes due to cut-off effect of Q3 sales, where we had a flood effect in Sahupuram facility in the last week of December. SIOP volumes on a quarter-on-quarter basis was also a tad lower due to normal seasonal factor of our export sales. Now coming to the EBITDA, the EBITDA for the quarter stood at 51.5 crores as against 55.1 crores in Q1 of last year, a drop by 6.5%. The margins for quarter stood at 10% as against 13% year back. The EBITDA from specialty segment, that is CPVC and SIOP, stood at 47.8 crores as against 24 crores in Q1 of last year, effectively showing a doubling of profit. The profit doubled back on increased volumes as has just now been mentioned. The EBITDA margins for the specialty segment clocked firm at 36% as against 33% in Q1 of FY'24. However, the commodity segment, which is soda ash, PVC and caustic division, put together achieved 3.5 crores of profit in this quarter as against 31 crores in quarter one of last fiscal. This drop in EBITDA was solely attributable to the falling prices witnessed across the comparative period. On a quarter-on-quarter basis, the EBITDA for the company also dipped from 68.9 crores to 51.5 crores, a drop by 25%. The margins were at 10% as mentioned earlier, as against 11% in quarter four of last year. The specialty segment profit stood firm at 47 crores as against 46 crores in the last quarter, a stable EBITDA margin of 36% across both the quarters. The commodity segment put together witnessed an EBITDA drop from 22 crores in the last quarter to 3.5 crores in this quarter. This dip is predominantly due to the caustic division, where there was briefly a pricing impact on caustic as well as SR. However, as mentioned earlier, that there were some cut-off sales in quarter four from quarter three of last year, and which also had a base effect in the EBITDA for quarter four. Finance cost for the company for the quarter stood at 16.9 crores as against 17.2 crores a year back and 19.9 crores in quarter four of last fiscal. Depreciation for the quarter was recorded at 24.5 crores as against 22.75 crores in quarter one of last year and 24.4 crores in quarter four of last fiscal. The company continues to remain in the old tax regime at 33% to utilize the accumulated MAT credit benefits in tax payments. The PAT for the company for FY'25 stood at quarter one FY'25 stood at 6.7 crores as against 15.5 crores in quarter four of the last fiscal. With this, we can open the floor for questions. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, in order to ask a question, you may please press star and 1. The first question is on the line of Poojan Shah from Molecule Ventures. Please go ahead.
Hi, sir. Am I audible?
Yes, please.
Yes. First question would be on the caustic soda division. So just wanted to know.
Mr. Shah, sir, your audio is not clear. Can you use the handset mode while?
Sure.
Thank you, sir.
Hello.
Yes,
yeah. Okay. Sir, just wanted to understand on the caustic soda division. So if we look, there is a clear dumping going from the industry. So how we have been witnessing in coming quarters, are we feel that price is being bottoming out, or still there will be a continuous dumping pressure? Will we keep the price, keeping the price intact, or like there will be erosion? Still erosion would be there in terms of demand, or like outlook on the demand as well as the prices.
Yeah. Good afternoon. Amitabh Gupta here. Well, caustic, I think it has bottomed out. Frankly, there is no scope for any further reduction in the prices of caustic soda, whether internationally or local. Because chlorine itself is under tremendous pressure, which is pretty negative for all the manufacturers. So I think the caustic prices, what we are seeing today is the lowest which we can think of. There is no scope of it going any further down. But then there is no scope of it going further up also, because there is enough capacities available. There are enough unutilized capacities available worldwide in India. So I think price will be more or less at this level what they are today.
Okay. And sir, on the I'm just continuing with the same question. So if we look at the chlorine, we have been becoming we are consuming internally in terms of chlorine, so we don't have to don't have to pay for the disposing of the chlorine. So are we seeing any improvement in terms of capacity utilization in caustic soda, because now we will be internally using, and eventually it would help us to increase our caustic soda capabilities?
Yes, positively we will be increasing. I think within the next 1 month we will be working to almost increase by about 15% increase in our production now. And I think in very short time we will be running to our full capacity, which will be about 250 to 260 tons per day.
Okay, got it. And sir, any comment on the CPVC, as we have been hearing of that there is a anti-dumping duty decision being made, like it is for the, currently it's under review, but are we looking any positive outlook due to such a dumping from East Asian countries? So are we positive on that part?
Yeah, we are very much positive, because already the Commerce Ministry has recommended continuation of the anti-dumping duty with the definitive duties on China and Korea. And we are waiting for the notification from the Finance Ministry, which should happen anytime, because the duties are set to expire in the last week of August. So we expect before the expiry of the current duties, the new notification is expected.
Okay. And in terms of prices, are that prices has been inched up due to expectation of ADD, or the prices have been the similar range of due to the dumping issues?
No. What was happening earlier was that there was a misuse of the duties recommended by the government by certain importers who were over-invoicing the product and having some out-of-the-books adjustments, and which I believe corrective steps has been taken, and with these duties getting converted into a definitive duties, percent duties, we feel that the misuse of imports will stop, which will help us to maintain the price.
Okay, got it. Thank you so much for clearing all my questions. I will get back in the queue.
Thank you.
Thank you. The next question is from the line of Madhur Rathi from Counter Cyclical Investments. Please go ahead.
Hello, good afternoon, sir. Thank you for the opportunity. Sir, I wanted to understand...
Sorry to interrupt, Mr. Rathi. Your audio is sounding very soft, sir. Can you
Is it better right now?
No, sir, it's still the same.
Hello?
Sir, it's still the same.
Yeah, am I better right now?
Sir, slightly. Please proceed.
Yes. Sir, I wanted to understand regarding our synthetic rutile segment, because as we understand that another player, Cochin Mineral, as well as some Kerala earth, rare earth and all, so there is an issue with ilmenite. So I wanted to understand how is our raw material sourcing for this product, and do we make the same product as these other players?
No problem. I didn't get you.
Why is it not able to hear your question?
Sir, I wanted to understand regarding our synthetic rutile segment. The main thing in this segment, as we understand, is the ilmenite, which is in shortage in our country, and similar, the shortage is for Cochin Mineral as well as the Kerala rare earth minerals. So I wanted to understand how is our sourcing arrangement in this segment, as well as do we make the same product as other players, or is our product different from the other players, like in the synthetic rutile segment?
Oh, first and foremost, I don't think there is any shortage of the product, because it is freely importable under OGL, and there are many suppliers worldwide who are supplying their raw material to India, and most of the people like KMML and all others are also importing, and even we used to import as and when we have a requirement. Apart from this, we are also getting supplies from Indian Rare Earth Ltd, which is a Government of India owned company. So I don't foresee any shortage of the raw material.
And so, is our synthetic rutile similar to other players, or are we into some differentiated synthetic rutile?
No, which players you are referring to? Unless you are more specific.
Cochin Mineral and Kerala Rare Earth.
Okay. You see, Cochin Mineral. No. What is the other company you said? Cochin Mineral and
Kerala. Sir,
No. You are talking about KMML, Kerala Minerals and Metals Limited, correct?
Exactly, yes.
Okay. So KMML is not in the marketing or selling of this synthetic rutile which we make. They make the final product, which is the pigment, titanium dioxide pigment. So they are not in competition. As a matter of fact, they are buyer of this product on and off and on. Okay. CMRL and DCW are in the same segment, same businesses, but then CMRL also makes a inferior product, which we are not. And this product goes in the manufacture of cheaper varieties of titanium dioxide pigment or this. So frankly, we are the only two producers. And they also make the high grade of about 94-95% TiO2 containing synthetic rutile, and we are also doing the same, but we are not in the lower grade of synthetic rutile, which is about 88 to 90%. Okay?
Okay, sir. That was very helpful. Sir, my next question would be, sir, we in the CPVC anti-dumping circular, we have guided that we'll make an additional investment of 150 crores for a for additional 20,000 metric tons of CPVC, sir. So, do we have some kind of timeline for this, or please can you?
See, what I would mention, as I said earlier, our aim is to become chlorine neutral in the short term. And along with CPVC, there are many other ideas which are on the drawing board, which we will communicate at the opportune time once we have decided which way we want to move ahead. And of course, our capex will be dependent on the financial position of the company at the time, the capital requirement for the project, and of course the turnaround time. So we will get back to you once we have decided on in which area our growth will be.
Okay, sir. Makes sense. Sir, and with this anti-dumping duty coming in, sir, can we see our CPVC margin moving from the mid-30% to higher 40, mid-40s kind of range?
Unlikely.
Sir, it will stay in the same range?
Yeah, I think it will remain in the same range. We don't foresee you see, anti-dumping duties are not for profiteering. So I think let us be very clear. Anti-dumping duty is only to protect the domestic industry and allow more investments to come, which we have seen because with the duty coming, we have seen the domestic capacity increasing, which is also set to increase more. So dumping duties are not for profiteering. It is only to allow and encourage more investments into India.
Okay, sir. Thank you so much, sir. Just a final question, sir. What is the outlook, if you can give me, for this whole year for revenue as well as margin terms? A general broad range would work.
See, in terms of guidance, what you're asking for, we generally would refrain from giving any guidance number and don't want to mislead any investors due to immense uncertainty in the global geopolitical environment, which is keeping our industry under extremely dynamic. However, as you can see, we are doing our best, in these uncertain times, keeping our costs in control, maximizing our utilization, and also adding capacity in value-added products. So, I think you can use, that as a baseline to work out what it could possibly be.
Thank you for answering my questions and all the best.
Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and want to ask a question. The next question is from the line of Karan from Invexa Capital. Please go ahead. Karan, we are not able to hear you.
Am I audible now?
No, sir, your audio is sounding very soft.
Now? Is it audible now?
Yes, sir, please proceed.
Hi, sir. Can you give me sales volume for the quarter across the product segments?
Excuse me, could you repeat the question? We did not follow that.
Sir, I wanted sales volume for the quarter across the product segments.
So I think the investor deck would have the volumes given over there. I think across all the products would be difficult for us to often give you. But we have the investors deck updated. We would have information provided there.
Sir, on the deck, I think production numbers are given. I wanted sales numbers.
So I think we're giving the revenue numbers. I think the sales numbers, you can drop in a request. We will provide the information on a specific.
Okay. And secondly, sir, can you update me with the current prices for PVC and CPVC?
PVC current prices are around $850 import parity, $830, which is around 78,000 rupees ex-works, which is almost 8,000 rupees lower than what it was in the last month. CPVC blended is around 150,000 rupees, which is a blended cost, which includes the compound and the resin. We don't give the breakup separately, so it's around 145, 150.
And what was the price for SR and SOIP?
SR prices are dynamic price because you don't have, it all depends on which geography you are exporting to. Because the prices that we sell into China are usually lower than the prices we sell to the Japan and other countries. So you cannot have any benchmark of the price. What we can say is that the prices...
The weighted average prices as of now is prevailing from $1,000 to $1,250 per ton.
This is for SR?
This is for SR, yeah.
And for SOIP?
SIOP will be close to $1,000, $900 to $1,000 approximately. FOB.
Okay. And sir, what was the reason for EBIT level loss for soda ash? I think we have marginally made profits. So why was the profit down this quarter? Have the prices fallen much below the quarter 4 levels?
So in the soda ash, we have been anyway operating at 75-80% capacity from the quarter 2 of last year. In the first the current quarter, we had certain multiple small stoppages of production. We've also had our revamping of our old kiln and put into line, for which there were a couple of days of shutdown as well. Those would have piled up and the productions were a bit on the lower side, but things are back to normal from this quarter onwards.
So what will be the full year production on for soda ash?
So we would be operating at around 80-85% capacity for the rest of the year.
So what's the realization?
I beg your pardon, please?
What is the realization for soda ash for this quarter?
Realization?
Yes.
The realization would be around 25,000 rupees per ton.
Yes.
Sir, are you done with your question?
Yes. Thank you so much.
Thank you.
A reminder to the participants, anyone wishing to ask a question, may please press star in 1. Participants in the conference, if you wish to ask a question, you may please press star in 1. The next question is from the line of Sanjeev Dabani from SKD Consulting. Please go ahead.
Namaskar, sir. I hope I am audible.
Yes, namaskar, boliye.
Sir, first thing I want to know, that in current quarter also, are we losing money in caustic soda like this? We incurred a loss of 20 crores in that segment. So I'm just worried and want to understand that are we still losing money in caustic soda, or there is somewhat improvement, or we are at par now?
So for the quarter which went by, in that we had a couple of challenges. One was there was price erosion so far as caustic is concerned from quarter on quarter by another 3-4%, which we think more or less is a bottom. We also had our export sales for synthetic rutile, which is subsumed into the caustic division, into the China predominantly, and the exports were a bit lower because of the sluggish demand in the metal business, metal as well as TiO2 pigments. So we are looking into opportunities for talking with the customers, and I think the situation from H2 would dramatically look better.
Okay, so means July has gone by and we are now passing almost 15 days of August. So here onwards, are we at par, or if you can give some idea, sir, so that we can make our estimates?
Yeah, so this quarter, that is quarter 2, we don't see any major shift of profitability profitability for the company as a whole. In fact, we see more pressure in the profitability for quarter 2 because we had an upside of PVC profits in this quarter after many quarters.
Yes.
Which, if the price corrections would come down, rest all businesses, while our specialty, which is in SIOP and CPVC, will further, we expect to make a bit more of a profit. But rest all businesses more or less look same, with soda ash obviously improving as we just discussed.
Okay, so we are expecting some improvement in soda ash, I have noted, because that was also I wanted to know. So, sir, now I am coming to SIOP. Sir, synthetic iron oxide pigment and synthetic rutile, are they same or they are different products, sir?
No, they are absolutely different products. Synthetic rutile is titanium dioxide, which contains 95% titanium dioxide, and SIOP is iron oxide. So, synthetic rutile is used to produce titanium dioxide pigment or titanium metal, whereas iron oxide is used, it's like a coloring agent. In the construction industry, it is mixed to the cement and used for plastering the outside walls, and also in the paint industry as a coloring agent. So they are absolutely two different things altogether.
Okay, so we sell synthetic rutile also to outsiders, and from this synthetic rutile we make SIOP and also sell it. Am I right?
No. We don't make iron oxide from synthetic rutile.
Okay.
Because synthetic rutile is used to make titanium dioxide pigment and titanium metal.
Okay.
And iron oxide is absolutely different thing altogether. For that we use iron scrap, acid. Okay.
So, sir, this synthetic rutile figures are not given in our presentation. So, any reason for it?
Synthetic rutile is a product which is subsumed as a part of caustic division. I think, sir, to answer your question, we have not made a segment product wise. We have only evolved as a part of a journey wherein we have created 2 new segments which are into the specialty individually. Rest all segments were predominantly caustic, PVC and soda ash, which we continue that way. And synthetic rutile has always been a product which is subsumed in the caustic division.
Okay. So the revenue and profitability of synthetic rutile is included in the caustic soda division. Thank you very much for clarification. All the best, sir. And I hope that our synthetic iron oxide sales will increase in the next quarter, because from 67 crore in last quarter 4, we have come to 48 crore. So, I mean, are we likely to come back to 60-70 crores in this quarter in synthetic iron oxide?
Just to answer, when we made our statement, we said that, synthetic iron oxide is likely what we have witnessed, a seasonal product, where in quarter 3 and quarter 4, if you see historically, our sales revenue and profitability, whatever little history you have, was higher compared to quarter 1 and quarter 2. And this is a natural phenomenon. So on a year-on-year basis, if you see from last year to this year, quarter 1 to quarter 1 of this year, we have gained around 80%, right? And on a year basis, when you see quarter 4, it will naturally go up quarter by quarter. But obviously, it will not come to that 8,000 that you see, because as I told you, we had 3-4 days, 10 days of flood activity, flood in our south facility from 20th of December to 30th of December. We obviously quantify one bulk shipment which was spilled over, but across all segments, some of the sales got spilled over to quarter 4, which either otherwise should have been in quarter 3. So quarter 4 for sales was a bit of an aberration.
Got it, sir. Thank you very much, and I congratulate for improvement in the margins in SIOP as a division. I really want to appreciate. We have much improved the margin here. Thank you very much, sir. More than satisfied, sir. Thank you.
Thanks for your comment.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. Participants in the conference, if you wish to ask a question, you may please press star and 1. As there are no further questions, I now hand the conference over to the management for the closing comments.
Thank you everyone for your time today and for joining our call. I hope we have been able to answer the questions to your satisfaction. If you have any further questions, please reach out to our investment relations advisors, Valorum. Thank you very much.
Thank you, members of the management team.
Thank you.
Ladies and gentlemen, with that we conclude today's conference. We thank you for joining us, and you may now disconnect your lines. Thank you.